Hey everyone, welcome to the KE Report and a company update on Thursday, July 17th, chatting with Brien Lundin. Brien is the editor of the Golden Newsletter and our host down at the New Orleans Investment Conference this year, November 2nd to 5th. I already have my flights and hotel booked, so hope to see all of you down there. I do really enjoy Brien's conference. It's a great chance to listen to a lot of high quality speakers, but also get in front of a number of companies that are exhibiting there, and you have a lot of time to chat with the management teams on the show floor. Brien, let's, as we always do, talk precious metals. I want to start with gold because, look, gold still is at a very strong price. Let's say right around 3,300, 3,250. It's really just been trading in a range, though, for about 3 months. The momentum, that upside momentum, where it felt like we were talking about new all-time highs week after week, month after month, that's slowed. Now, again, it's consolidating sideways at this high level, but the momentum is kind of off the table right now. It's not outperforming all these other markets because it's simply moving sideways, but we have seen money more so filter into the stock. So, Brien, what's your thought on gold and this sideways movement we've been seeing?
Yeah, thanks, Corey. I'm very encouraged by this sideways movement. Over the history of this bull market, which has gone on, I don't know, what is it now, almost a year and a half now, we've had not so much corrections, but pauses. And those pauses have been marked by a collapse really in volatility upside or downside, where we traded sideways for a while. And as we often put it, gold kind of coils and gets ready for another big move. During this bull market, all of these moves, save one, that being right after the presidential election in the U.S., all of the moves have from these quiet periods have been upwards in really dramatic rallies. And now we're getting to that point where volatility has collapsed again. Gold seems to be coiling for another move. And coincidentally or not coincidentally, it's coming during the typical summer doldrums. During my very many years in this market, I've noticed anecdotally and, working the numbers very carefully, that gold typically, in a typical summertime seasonality, typically bottoms somewhere between mid-July and mid-August. We're right at that point now when gold should, if it does as it did in the past many times, be bottoming and getting ready to rally again going into the fall. The people, the investors who really track this and follow this and take time off from their family vacations to follow the market and get involved in metals and gold and silver and in the juniors during these summer doldrums as the metals prices are bottoming, they can often get a 10 or 20% jump in the market from when all the other investors tend to get in at the end of August or in September. So it's a good time to really pay attention. Gold appears to be signaling that it's ready to rally once again. The Bollinger Band width chart that I've been tracking that has worked so well for us, I'm looking at it right now, and it is at the low levels, some of the lowest levels that it has been during this bull market that have often and almost without fail signaled an upcoming rally. So I'm really excited about it. I think this is just what we need to see.
So, Brien, as I said, I think money has rotated into the stocks and even further down the food chain in the stocks over the last now about month and a half to 2 months. We've seen a lot of juniors, albeit off very low levels, have some very nice price increases. But that really begs the question here is that as money rotates maybe out of gold or simply down the food chain, do these stocks need gold to make another leg higher to keep that momentum going? Or is it okay if gold, let's say, even just continues to move sideways for the next couple months, even through the rest of this year, and allows, I guess, analysts and banks to continue to raise their price targets? Is that enough to continue to support higher gold stock prices?
Yeah, even though I expect an upcoming rally and some more fireworks in gold going into the fall, I do think it is enough to just maintain these levels. Every day that we spend at these levels grows the credibility of this bull market and the likelihood that we're going to maintain gold prices over $3,000, and very likely that silver will soon close the valuation gap and get over $40. And that's enough. This bull market was driven by central bank buying and continues to be to a very large degree. And Western investors were on the sidelines. Now they're trying to participate in it, and they see how far gold has gone, and they're choosing to participate through the leveraged options of silver and the mining stocks. And if they're looking for torque, if they're looking for performance, they're going to move down the food chain into the juniors. And as you've seen, we're starting to see, even during these summer doldrums, we're getting some real excitement in the juniors. Financings are being announced and closed, or closed before they're being announced. The money is flowing into the sector, and there's some indications that a good bit of it is generalist money as well, which is really important.
Yeah, the whole financing angle, that I think kind of came out of the blue for some of the juniors, because I'm sure you were having the same conversations at the beginning of the year with these juniors that were saying, we can't even raise $2 million just to keep programs going, just to keep the lights on. Some of these same companies now are coming to market with $4-5 million financings. As you said, they're being closed very quickly, and the share prices are continuing higher, or at least staying at levels above the financing price rather than selling off right after. What are you doing in the financing game then? Are you seeing a lot of opportunities, or do you think that some of these financings that have come in, let's face it, some of the lower quality companies, some of the companies without even resources, are you shying away from them?
Yeah, I'm seeing a lot of opportunities, frankly, more than I can take advantage of. I want to own more stocks in this market. There are a lot of really good companies, really good opportunities, and far too many for me to personally take advantage of. So somebody is, though. There's money coming in. There's no problem raising money. It is going down the food chain, not only from the majors, mid-tiers into the juniors, but into, as you said, the lower quality juniors, or the exploration plays. And think about it too, Corey. You just mentioned that we're seeing $4 or $5 million financings, which, are eye-poppingly large given our experience of the past few years. But we're actually seeing some financings of $30-40 million for some of these companies that are in the development stage. And we're looking at things like Apple giving, what is it, $400 million to Mountain Pass, and plus Department of Defense and federal money. And it brings up a point that I've been making over the past couple of months, in that if we see the generalists come into the sector, the numbers that we have been used to looking at in the sector are not even rounding errors to the kinds of money, the kinds of amounts that these generalists, these hedge funds, these tech companies can put into the sector without blinking an eye. They can take a project of $1 billion capex and just say, hey, let's do it. Here's a check. And it's not so much in the new reality, the absolute bottom line economics of, can these metals, can these critical minerals, can gold and silver be produced at an adequate profit and return on investment? But what's the security of supply? In a lot of cases, especially obviously in the critical metals, that becomes more important than the economics. And they are going to throw money at this sector that's going to be mind-boggling for those of us that have been used to in raising our eyebrows at $4 or $5 million financings.
Yeah, it doesn't it seem like we've been talking about this for a long time, hey, is that when some of these big tech companies get in, or some of these other companies in major industries come into the sector, it can really move the needle in terms of bringing in the needed capital. But as you mentioned, with that Mountain Pass deal, so MP Materials, Department of Defense put together a financing package, Apple's coming in. This is all for US based magnets and even recycled material making these magnets. But again, that's more of these critical minerals. What about the precious metals? Do you see outside people, outside companies coming in, or is it still very much these juniors or mid tiers or the development plays simply looking at the majors saying, give us some money, take us out?
Yeah, I think importantly, we really haven't seen that kind of M&A come into the gold sector. We have seen a bit of it in silver, and that's an interesting area where, what's going to be the next silver plays to get taken over? Because there is upside left in that, just, relative to the gold valuations. But we really haven't seen it in gold yet. And I do think it's coming. The junior sector, the development sector, is just inordinately cheap compared to the free cash flows of the major miners right now. So eventually that's going to happen, but it just hasn't happened yet. But again, the longer gold spends time at over 3,000, over $3,300, then we're going to see that those kinds of acquisitions come about sooner or later.
So one thing I've noticed too is that money going down the food chain has maybe closed a little bit of that valuation gap between the majors down to the juniors, with the smaller ones playing a little bit of catch up. Does that entice the majors to make some deals because they're seeing these smaller stocks, even some of the mid tiers, catch up to them a little bit more?
Well, it should, but I don't think the move so far has been enough to create any kind of concern on their part. What will create their concern is if we get in some bidding wars with some of the better assets out there. Crescat and our friend Tavi Costa had a great chart out showing the TSX Venture Index against the free cash flows of the major miners and the gap between the two. The lines are actually, interestingly, they correlate very closely until recently. And now the gap is just growing with the free cash flow far exceeding any response in the venture index. So that just speaks of opportunity. Those kinds of gaps will be filled, and they would have to be filled at some point by, the juniors trading at 2 to 3 times their current levels. And that's just the juniors that have assets. It doesn't speak to the exploration plays and the more highly levered, more speculative end of the market.
So, Brian, this silver catch up. Silver's really caught the attention of a lot of investors because it's been moving strongly. We've even seen the gold silver ratio that was just a few months ago at about 107, just under 107, now down in the mid to high 80s. Silver, again, it's had the momentum just in the last few weeks, and we've seen silver stocks move up. That does also speak to investors taking on more risk because silver, quite simply, smaller market, less stocks to get into, and smaller stocks. Where do you see silver going? A lot of people are calling for $50 silver in the near term. What boat do you land in?
Yeah, I think $40 is a given now in the nearer term, I would say over the next couple of months at some point. But every time, I mean, it is really fascinating if you look at it on an anecdotal basis. I was traveling for a couple of weeks overseas and wasn't able to track the market that closely, but I could see the day-to-day metals price closes, and you would see silver up 20, 30, 40 cents, then get slammed, but there was no continuation on the downside, and then it would bounce back. It's just been amazing how resilient silver has been and how resilient it has been in the face of these periodic attacks to try and drive the price down. So I'm very bullish on silver going forward. I think we're going to add another couple of dollars to the share price, get around $40 an ounce pretty soon. But the silver juniors are where you get leverage on top of leverage. As I always say, silver leverages gold. The silver juniors leverage silver. So you can add leverage on top of leverage by investing in these junior silver plays. And yes, they have moved a bit, but still nothing like we saw, say, in the spring of 2016 when they went up 4 or 5x over 6 months. Those are the kinds of moves we are going to get when we get silver over $40 and into the low 40s. These things are just going to explode higher.
So, on the front of all these companies, or a lot of companies, I can't say all, but a lot of companies are cashed up. There's a lot of drilling going on now. There's also a lot of companies working on continuing to de-risk their projects. We keep hearing about companies looking at financing packages. What has you most excited right now, Brian? We are going to just be inundated with news near the tail end of this year. Where do you see some of the best opportunities and any names that you have, if possible?
Yeah, I'm excited about the companies that have big resources and are making news, have drill results coming out, and are dramatically undervalued. Again, I think Banyan is one of the top plays out there. I want to own more of it. I don't own enough of it in my portfolio. I think it's a great company going forward. I am also very excited about the drilling coming up, as you mentioned. Lots of money out there. One of my favorite plays out there right now is Prospector Metals. It's drilling a project that has never been drilled before. It's a great team, great historic work, but not the drill holes yet. And it's got a great model. I think that company is, and I shouldn't be saying this because I want to buy more. It's another one of those companies I don't own enough of that I would like to buy more when I can free up some more cash. But that's one of the exploration plays that I really like going forward. And there's lots of companies out there. If you look at the silver juniors, I like where Blackrock is right now. I've always liked Vizsla. It's a 12 bagger so far in our portfolio, but I think it's an easy double or triple going forward, and probably one of the next takeout plays by a big company. There's just a lot of news that's going to be coming out. Relevant Gold is a company that I like and I own, and their upside potential on the project they're drilling right now in Wyoming is nothing short of potentially controlling a new Abitibi greenstone belt, and that has tremendous upside potential. Great technical talent on that company, and every technically oriented, very experienced geologist or a financier that's ever looked at that play ends up buying it. So lots of news, as you say, coming down the pipeline, and I'm excited about that.
All right, Brian. We'll wrap it up here. Again, this continues to be a bull market for the precious metals and for other commodities. Copper's doing well, a number of other precious metals also doing well, but right now I really do feel like we need another leg higher in gold just to keep this momentum going and keep bigger money coming into the bigger stocks, which have lost at least a little bit of momentum, but it is encouraging to see that money rotate into the juniors and those start to play some catch up. It's all just a process, and let's all hope this process lasts a while so that everybody can enjoy some bigger gains in their portfolios. Again, Brien Lundin, editor of the Gold Newsletter, also host down at the New Orleans Investment Conference, November 2nd to 5th. Brian, thanks as always for your time.
Great. Thanks, Corey.